Your first guest today might agree with that. He's been saying on this show for a while to diversify beyond just big tech. So let's see what he has to say about that, what to buy, what to own next year. Joe Tanious is Chief Investment Strategist at Northern Trust, and he joins us now. I know that's not you. You're not Bank of America. But
I'm not surprised.
Okay. Are you seeing similar types of data at Northern Trust?
We are. I think there's genuinely a lot of excitement about the opportunity ahead in 2026. I mean, you can just rattle off the list. You have a meaningful amount of fiscal stimulus as a result of the One Big Beautiful Bill Act. You have more accommodative monetary policy. There's a lot of discussion and hems and haws about the Fed and what they're going to do. But by and large, we know that we're going to see more accommodative monetary policy. You have earnings which are expected to grow at a double-digit rate, a decent clip. And you're also expecting to see a broadening out, if you will, so more participation. It's not just going to be a narrow market like we saw in the earlier.
But where is the wall of worry, Joe? The whole point is if everybody sees it that way, and now we have it so the fund manager survey is a classic fading sign, don't you think? So what does it tell you to see the excitement level this high?
Well, I think there's a lot to be nervous about. There's a lot to be worried about. And certainly you can talk about the client questions that we've been getting. There's a lot of anxiety about a bubble, about what's happening with tech and what's happening with AI. A lot of this concentration. Of course, inflation just barely, touched on it. But the reality is inflation is likely to move higher, at least in the earlier part of the year. And that may certainly pour a little bit of cold water on hopes that the Fed is going to come out and cut monetary policy perhaps more aggressively than we'd like. So make no mistake, there are a lot of things to be concerned about. But I think about where we are today relative to where we were just a few months ago, and I think the risks have come down materially.
It feels like the biggest, and I'm using fear, air quotes, if you're on the radio, because the biggest fear is how much money people have made the last 3 years, Joe.
It's insane.
There's hundreds of thousands of 401k millionaires, folks. We hope you are one of them out there. And everybody that I talk to just at dinner parties, whatever it may be, is like, can this keep going, Brian? Because I've made so much money. I feel like I should sell some.
Some are moving to cash preemptively.
Nervous.
Not sure what's worse, to go to cash and miss out on continued gains, or to stay in the market and look back and go, geez, I should have saw it coming.
Yeah. And I think those are warranted, fears and concerns.
They call that a good problem.
It is a good problem, but nevertheless, it is a problem. I mean, so much of what we have seen over the course of this year has been driven by this AI narrative, this AI rally. And so it's understandable that as you look ahead into the year ahead, you question whether or not it is sustainable. So I think there are reasons to be optimistic, yet at the same time, I think we need to have a very balanced point of view.